Hello, I'm Bernard Hickey from interest.co.nz and welcome to a housing report brought to you in association with Bank of New Zealand. Today I've got Alistair Helm here at interest.co.nz. Welcome in, Alistair.
Thank you, Bernard.
From realestate.co.nz, who puts out a monthly report on listings on realestate.co.nz. And you've got the report just hot in off the press for January, Alistair. What does it say about listings, inventory, that sort of thing? And we're just going to go, as we speak, to the report that's put out on the Unconditional blog, which is on realestate.co.nz.
Yep.
Let's look first at the numbers for listings on realestate.co.nz. What are you seeing through December, January, November compared to previous years? This one here.
Well, the listings are continuing at a low rate. We've had this sort of gradual contraction in the market for the last year where less listings come on the market. There's been this hesitation by sellers to commit to the market. And it's interesting that is now counterpointed with an increase in activity of sales. And January saw just a smidgen over 8,500 listings. January is low months. December and January are slow to get the property market going. The big months are November, February and March. So we're on the cusp of that. But 8.5 was lower than I anticipated. I thought we were going to start seeing this reaction to the market and more property listings coming on, but it didn't come through. And as you can see, it looks much like the previous couple of years in the November, December, January figures there.
So why do you think that is? Because the market is starting to bubble along, particularly in Auckland and Christchurch. People are talking about higher prices, and when you see that, some people think, I better jump in and get a good price. I'll put my house on the market now and see what I can get. But that's not the case. And particularly when you look at the inventory levels, the number of weeks of houses on the market, which shows continual drop-off in the inventory levels. What do you think's going on there?
Well, you're right. I mean, it is a hesitation, and it's hard to quantify why are sellers having this hesitation. I think part of it is that was almost they got spooked by the 5-year bubble as we had in this country, and it's taken them a while to have their confidence come back into the market and sense that they can be more certain with a degree of certainty that we're not going to have a collapse of prices. We're certainly probably not going to have the upside of massive inflation, and that sense of confidence is gradually coming through, but it seems to be hesitant still within the market. As you comment, the main cities are the driving part of this total property market across New Zealand. Provincial New Zealand is patchy. Some bits are buyers' market, some are sellers. But taking the total, it is a seller's market. In Auckland, Wellington, Christchurch, it is definitely a seller's market, no doubt about it.
Just looking now then at seasonally adjusted asking prices, and surprisingly, a bit of a drop in asking prices in recent months, which doesn't quite tally with the signs of the market bubbling along. Why do you think asking prices are dropping at the same time as inventory is dropping? If it's a seller's market, surely they'd be putting up their prices.
It in some ways defies the logic of the economics of supply and demand. If you've got a contraction, you've got this demonstrable increase in activity by default of the sales volume, which are up about 20% of the last 3 months compared to last year. So it doesn't make entire sense. But I think one of the things I've been thinking about, and again, no empirical evidence, but a sense that the industry has gone through radical change, and this industry is 90% real estate agent-led. It's not a private seller's market. It's 90% licensed real estate agents. And I think what we've seen is a big change in the industry. And possibly a function of that is the reduction of number of agents, less aggressive competitive fighting for listings, may actually have changed the dynamics whereby in the past you'd have had 3 or 4 agents pitching for a listing and maybe aggressively pitching a higher price. We're now getting almost pragmatism in the sense of agents being realistic to the market ability to sell at a price and thereby almost exceeding expectation in delivering a better market outcome for the seller. So that's a hypothetical. It's not born of empirical. But it's an interesting correlation, I think, to possibly look at.
So the suggestion is agents are being less aggressive when they're pitching prices to potential sellers. And so when the listing price goes on, it's not quite as aggressive, but the actual sales price might be higher than the listing price.
It could be, and that's really letting the market decide, which is what the industry would always say. The market will decide, and rightly so. It is an illiquid market. It's not a generic market. Properties are all unique, and therefore the demand created by a particular property will reflect exactly that property's demand, not the aggregated demand. So it could be a possible explanation because, as you say, economic logic wouldn't give you a declining listing price at a time when listings are tight and inventory is tight and demand is rising. Just
let's look now at the part of the report which looks at new listings through the various different parts of the country, because the reason I like this report, it allows you to drill down in various different areas. What is this showing region by region is happening with new listings in January compared to a year ago? Because that takes out some of the seasonal effects.
Well, one of the things we try and do with the report is make it sort of simple around, is it a buyer's or seller's market? Now, the indication of this listings chart around the country is really an early indicator. So it's saying in that month, year on year, what's the trend? And we're seeing here quite a bit of green, which indicates that actually listings are starting to rise. Interestingly, in provincial areas, less so than in the cities, although Canterbury and Wellington are up a little bit. But some amazing rises through the Taranaki and the Central Otago Lakes, Queenstown area. Counterpointed to the East Coast, Wairarapa, Gisborne, low on listings in the month, Coromandel and Northland low in listings, and Auckland pretty much exactly the same as the last month. So, as ever with this report, once you go into the regions, you get diversity and a range of outcomes. And here we're seeing quite a significant difference.
So just to get clear here, the colour coding is green, which means lots more listings coming onto the market, makes it a buyer's market, and blue means fewer listings, tighter market means it's more of a seller's market.
Yeah, exactly. For the immediate months from that point of view, Whereas this is, as you point out, is the inventory, which is the picture of what's on the market compounded by what's coming off as sales and what's coming on as new listings.
So let's look now at the tight parts, the sellers parts of the market, which are the blue here. Coromandel, Auckland, West Coast, Canterbury, those areas which seem to be the tightest.
Yeah, they are. And you've got to remember that the big regions, obviously Auckland, Wellington and Canterbury, are all in blue. Auckland and Canterbury particularly dark, indicating they're well below their long-term average. If you take the Canterbury region there, 33 weeks is the long-term average, and that's weeks of equivalent sales, and they're at 22 weeks. And that's a significantly tight market. Same with Auckland. Interestingly, the Coromandel has been, over the last 2 years, flush with listings, but it's actually become tighter as that market has started to pick up again.
Excellent. Alistair Helm there from realestate.co.nz with the monthly property listings report, listings on realestate.co.nz. And that was another in our series of housing reports, brought to you in association with the Bank of New Zealand. I'm Bernard Hickey for interest.co.nz.